I think autonomous electric taxis should be valued at roughly $2 trillion today in the equity markets, and they're virtually unaccounted for.
Hey, I'm Steven and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. So in this video, I'm reacting to some clips of Tasha Keeney from Ark Invest sharing her thoughts around Tesla's stock, the S&P 500 inclusion, autonomous ride-hailing, and more. So let's get into the video. But first, hey guys, if you live in the US and you'd like to help out the channel and get up to 4 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 2 free stocks between $2.50 and $250 each just for opening an account. And if you deposit $100, you'll get a further 2 free stocks valued between $8 and $1,600 each. That is an obnoxiously good return on your investment. I mean, really, deposit $100 and you'll end up with, at minimum, $21 worth of stocks, a 21% ROI on your money. And if you're in Australia, the UK, or New Zealand, you can get a free stock with stake also using the link in the description. Let's get back to it. And just a quick note to the Ark Invest fanboys and fangirls out there. I mentioned yesterday in a video that I began establishing a position in the Ark Fund. I didn't tell you exactly when that happened. Well, I began buying on the 9th of November this year. Also took out a reasonably sized position just before posting that video. Amazing timing. Not that I had any inside information, just a total coincidence, but the Ark Fund up over 6% on the day yesterday, another 4 or 5% in the after hours. So not a bad start. Let me know in the comments below if you guys would like a deep dive on the Ark Fund and a little bit more insight into why I'm so excited about the potential of genomics in the future. All right, let's get into it.
Let's take a look at a big mover here in today's market to the downside. That is Tesla, with shares off just around 5.5%. Today is the first day that Tesla is now included in the S&P. And for that, we want to bring in Tasha Keeney. She's an analyst at Ark Invest. And Tasha, you've been a huge Tesla bull now for quite some time. Tesla is your firm's top holding. Let's just start with, what do you think of the inclusion today now that Tesla is a part of the S&P, and how does that play into your investor thesis?
So Ark Invest has always been an active manager, and we focus entirely on disruptive innovation. So when we think of the inclusion, well, one, indexes are by their nature backward looking. I would say that doesn't change our thesis, which is that Tesla is a leader in autonomous electric vehicles. But in terms of, are we surprised? No. I mean, if you look at the future of the auto industry, it is EVs and it is autonomy. And I don't think that necessarily all the automakers that are around today will survive that transition. But Tesla looks like it will. It's the leader in both of these markets. It should sort of be thought of as an important stock to look at in that segment.
Tasha, Brian Chung here. So what has been interesting is that everyone's been saying the same thing. We knew this was going to happen, so it doesn't change anything today on day one of it being part of that S&P 500 club. But is there anything to be spoken to about the liquidity of the stock now that it's part of that index? Obviously, the S&P 500 is not an ETF, so it's not buying up shares of Tesla per se. But does the increased visibility here, based off of maybe even this morning of trading, show that there's higher volume and liquidity, at least for this stock right now?
Yeah, I think, it certainly gets the company more visibility, and that's certainly a possibility.
Just on the increased visibility around Tesla stock, there's definitely something in this. I noticed in the past 24 hours, there has been more mainstream finance media coverage of Tesla stock than any time in the past that I can personally remember. Multiple segments on multiple networks. Now, sure, the stock split generated a little bit of interest. So have some of the days where Tesla stock has grown substantially. But I've never seen anything close to the amount of mainstream finance media coverage around Tesla stock's inclusion in the S&P 500 in the last day. This may bring additional eyes and additional attention to the company. Whether or not that has any impact on buying activity or selling activity around the stock, I don't know. But for sure, the spotlight has been shone on Tesla today in a really big way.
But, again, for us, we're focused on the 5-year time horizon. So, we see EVs going from 2 million units today to 40 million over the next 5 years.
40 million EVs by mid-decade sounds pretty insane, but let's see if it aligns with my own projections. So here we're looking at my estimates for Tesla's production capacity and now their actual deliveries, which is about 85% of production capacity, accounting for downtime, repairs, maintenance, etc. What does that work out as a percentage of, say, 40 million electric vehicles? So my 2025 Tesla delivery estimates, over 40 million vehicles total market size, equals about 18-19% market share. Fancy that. It's pretty much bang on where Tesla is today. Total coincidence. To be honest, I'm not actually modeling out how many new vehicles will be electric in any particular year in the future. I'm just making the assumption that Tesla's going to be able to continue to scale production based on my own projections, and they'll sell every vehicle they make. Now, let's just say for some reason there's only 30 million electric vehicles sold in 2025. Well, in that case, we're going to end up with a very different figure in terms of Tesla's total market share. But as I said, I still believe they're going to sell every electric vehicle they make. Whether they've got 18% or 25% market share doesn't really matter. Do I really believe that Tesla will deliver around 7.5 million electric vehicles in 2025? Yes. Now, just to be really clear, this exponential ramp in production may shift by a year or two in either direction, so there is a margin of error. What I'm projecting isn't this exact number of vehicles will be delivered exactly in this year. What I'm projecting is the trend. I know I will be right. In fact, I'm putting this on the record repeatedly so that I can leverage this in the future to further enhance my own credibility and erode the last remaining skerricks of credibility any of the Wall Street analysts had left. And by the way, if any Wall Street stock analysts happen to be watching this video and you vehemently disagree with my numbers, my projections, please by all means get in touch. I'd love to make a wager publicly so we can see how this plays out.
I think autonomous electric taxis should be valued at roughly $2 trillion today in the equity markets, and they're virtually unaccounted for.
So hypothetically speaking, if Tasha's correct and the autonomous opportunity should be valued at around $2 trillion and is barely accounted for today, and assuming that Tesla is in the pole position to win autonomy to sell fully autonomous vehicles before anyone else, that army of 1 million plus vehicles collecting data, training the AI, that whole thing, it's a pretty good chance that their lead is unassailable. If these assumptions are correct, is it a possibility that over the next few years, as it becomes more obvious that Tesla has won full self-driving, that Tesla has won autonomy, that some of that $2 trillion valuation will end up assigned to Tesla stock? Is that a possibility? What do you guys think?
Those are really the two markets that we're most interested in for Tesla, and it's an exciting time, especially in autonomy. Waymo this year, I would say, just truly commercialized their autonomous taxi service. That is, they let the general public in. So we know that the technology is here and it's possible. And Tesla has a major data advantage compared to any other company in the space. So we'll see how this full self-driving beta goes that they released, and how that rollout plan looks over the next year, let's say. But, I think ride hailing could be extremely profitable for this company.
In my opinion, that is a rather enormous understatement there from Tasha.
Tasha, when you talk about ride hailing and then, of course, the robo-taxi network, what does the timing look like for that, just in terms of your expectations?
Well, that's a great question, because the robotaxi network, there's some uncertainty there. Tesla hasn't pulled this off yet, and it's a really hard technological hurdle to clear. We've learned that from the many companies that have promised to deliver and failed, either on timeline or, they're sort of nowhere near the goals that they set out 5 years ago on autonomy. So actually, our latest research is looking at what it would look like if Tesla were to launch a human-driven ride-hail service. So this ride-hail service could have similar profitability characteristics to robotaxi, at least if you look at the early days of both of those markets. And it would be a way to launch a recurring revenue stream, again, that we think is more profitable than the core business. And they could do it now. So I think between those two opportunities, I would be looking for something out of Tesla over the next year. I'd say the 2021, perhaps late 2021 timeframe. But make no mistake, even though this is something that's in the future, Tesla should. You really shouldn't count this against Tesla. I think they're very uniquely positioned in this space. They have vertically integrated insurance. They could do their own financing option to attract drivers to the network. And basically, to set up the blocks for robotaxi, you need the same sort of steps to get to a ride-hailing network. So that is, payments integration, routing algorithms. So this is stuff that they all need to do ahead of robotaxi, anyways. But human-driven ride-hailing is something that they could do today, and then basically transform the business into a robotaxi network as that capability becomes possible to commercialize. And then in that case, we'll see that they could drop the price of ride hailing over time significantly. And then that way, they'd have a huge competitive advantage over anyone else that does not have autonomous capability in the market today.
And Tasha, you laid out quite nicely the argument for why this type of vertical integration might be helpful to Tesla in the near term future. But obviously, the company working through a number of other things as well. When you think about the Cybertruck, obviously everything else that Elon Musk is trying to do between his tweets, which is another issue. But I guess I'm wondering just broadly, what are some of the other storylines that you're watching beyond that possible taxi service in the future? Let's say in the next 2 to 3 years for Tesla.
Absolutely. So, I mean, just look at the core EV business. My colleague Sam Kors has done a lot of great research showing that the cost decline that we see in electric vehicle batteries, and specifically Tesla's batteries, will allow it to price a mass market EV on a cost competitive basis with a gas powered car. So you're sort of seeing the early innings of that with the Cybertruck, that price comparison. But we heard at Battery Day that over the next 3 years, they plan on releasing a $25,000 car. And when Tesla does that, I mean, the opportunity really just runs away with them.
I don't think the market is fully appreciating the seismic impact that a $25,000 Tesla will have. In 3 years' time, if Tesla can produce this vehicle, $25,000 starting price, it's equal or lower than the average new vehicle in the US, and cost of ownership is a fraction of an internal combustion engine vehicle. And with Tesla's software prowess, safety, etc., it is going to be far better value than anything even close to its price range, electric or otherwise. This vehicle, this is the thing that's going to propel Tesla from a niche automaker to an absolute monster. Mark my words.
And if you think of a traditional automaker, trying to compete with that price, that's pretty difficult to do if you don't have Tesla scale. And, you haven't even created a performance EV yet. We really haven't sort of seen a comparable EV from competitors.
You guys kind of understand the significance here, right? Today, no one can compete with Tesla's high-end vehicles, the S or X, on performance, price, value, nothing like that. They also can't compete with Tesla's mid-range vehicles, the Model 3 and the Model Y. Not even close. In 3 years' time, automakers will be struggling to compete with the S and X, not even close to the 3 and Y, and Tesla will have a vehicle that's undercutting these by $10,000+ and outperforming them. This is the end of the internal combustion engine industry. Once Tesla's $25,000 vehicle reaches volume production, we will see the bankruptcies start rolling in at a rapid rate.
So I think that sort of over the next 3 years, as you said, will be a major hallmark just for Tesla, but the electric vehicle industry in general. Again, we think this is the future of the auto market. And while I think that EVs are getting more attention these days, I don't think that most analysts appreciate that demand inflection point that we see coming with that price parity point, and that's what could get EVs to that $40 million unit sales number that we're predicting in 2025.
So I hope you guys have found this video insightful. The key takeaway is that this inflection point in terms of EVs getting price parity and then undercutting internal combustion engine vehicles is just around the corner. And the vast majority of people out there, whether you're talking the average consumer, a stock analyst, or a retail investor, have absolutely no idea of how soon and how enormously fast this EV transition is going to happen. We're still in the early deceptive stages of this S-curve, but 2-3 years time and everyone is going to realize what's happening. At that point, the people with the outrageous, insane sounding predictions are going to look like geniuses, and everyone else is going to be looking around to each other going, well, how was anyone supposed to know that was going to happen? I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. And don't forget, if you live in the US and you'd like to help out the channel and get up to 4 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 2 free stocks between $2.50 and $250 each just for opening an account. And if you deposit $100, you'll get a further 2 free stocks valued between $8 and $1,600 each. And if you're in Australia, the UK or New Zealand, you can get a free stock with stake also using the link in the description. Thanks so much for watching. Let me know your thoughts in the comments below. And of course, if you have any ideas for future videos, let me know. I read all your comments. P.S. If you're still watching, you're awesome. If you'd like early access, exclusive videos, regular Q&As, our private Discord server and more, consider supporting the channel at patreon.com/solvingthemoneyproblem so I can keep creating content for you guys. There's a link in the description. You can now also become a member of the channel for some exclusive perks. To learn more, click the join button next to subscribe. And don't forget to check out our merch store. Either way, the best form of support is you being here and watching, so thanks again.